Let me tell you something that might mess with how you see the whole crypto world. Bitcoin, the thing that turned early believers into millionaires, is not the most important thing blockchain ever gave us. Not even close. I know that sounds like I'm about to sell you something. I'm not. Stick with me. Think of it like this. When the internet was invented, most people thought it was just a cool way to send emails faster. Nobody looked at it and immediately said, "Oh, this is going to give us Netflix and GPS and the ability to order dinner without talking to a human." The technology was bigger than the first thing it was used for. Blockchain is sitting in exactly that same moment right now. The global blockchain market was valued at over $40 billion in 2025, and it's projected to grow at a rapid rate. But here's the thing. The bulk of that growth isn't coming from people buying Bitcoin. It's coming from companies, governments, and builders who figured out that the real power of blockchain isn't the coin. It's the infrastructure underneath it. Blockchain is, at its core, just a way to record information that nobody can secretly change or delete. That's it. No single person controls it. No company can sneak in and alter the records at 3 a.m. Once something is written on a blockchain, it's there. Permanently. Transparently. And when you start thinking about all the places in the world where trust is a problem, where people lie, forge documents, manipulate records, suddenly this technology starts looking less like a speculative asset and more like a solution to problems that have existed for centuries. So let's start with something that affects every single person watching this. Your identity. Right now, think about how many places have your personal data. Your bank, your hospital, your email provider, your government. Every time you hand over your name, your address, your ID number, you're trusting that organization to keep it safe. And we all know how that goes. Data breaches are basically a weekly news story at this point. In 2026, the concept of self-sovereign identity is moving from a nerdy tech idea into real-world policy. The idea is simple. You own your identity. Not Facebook, not your bank. You. The EU's EBSI program is already supporting digital identity and academic credential verification across member states. WorldCoin launched a proof-of-personhood protocol using biometric registration and on-chain identity. Polygon ID offers self-sovereign identity infrastructure using privacy-preserving technology for secure credentials. Italy became the first EU country to launch a digital identity wallet in late 2024, with full rollout beginning this year. The blockchain identity management market is projected to reach over $200 billion by 2034. That's not a small bet. That's governments and institutions saying, this is the future of who you are online. The applications here go way beyond just logging into websites. Imagine crossing a border, and instead of handing over a physical passport, your verified identity lives on a blockchain that any authorized government system can instantly check. Imagine voting in an election from your phone with absolute certainty that your vote was counted and wasn't tampered with. That's where this is heading. Now let's talk about something that touches your life every single day, even if you've never thought about it. Supply chains. When you buy a piece of chicken from a grocery store, do you actually know where it came from? What farm? What conditions? Was it handled properly the whole way? Probably not. And neither does the grocery store most of the time. The global supply chain runs on a system of trust and paperwork that was designed before computers existed. It's slow and full of gaps. IBM's Food Trust blockchain pilot with Walmart reduced the time it took to trace mango provenance from 7 days to just 2.2 seconds. Read that again. 7 days to 2.2 seconds. That's not an upgrade. That's a completely different world. The blockchain supply chain market reached $5.23 billion in 2026, reflecting a shift from pilot programs to full operational deployments. Smart contracts lower administrative costs by up to 42% for invoicing. Trade finance processing times drop by an average of 81%. Think about what that means for counterfeits. Over 70 million luxury products have already been registered on blockchain tracking networks. When a designer handbag has its entire journey recorded from the factory to the store shelf, faking its provenance becomes nearly impossible. The same principle applies to pharmaceuticals. The sector alone could save an estimated $218 billion annually through blockchain-based fraud reduction. Customers want to know their coffee was ethically sourced, Blockchain gives you an immutable record of every step in a product's journey. You can't fake it. You can't go back and edit it. That's a game changer for any company trying to prove its sustainability claims. Now let's get into tokenization, specifically taking a real-world asset, a building or a painting, and turning it into digital tokens on a blockchain. Here's the problem with real estate today. If you want to invest in a prime building, you basically need to be very rich. Tokenization breaks that open. A building worth $10 million can be split into 10 million tokens. Each token represents fractional ownership. Suddenly, ordinary people can invest in real estate like a share of stock, with low minimums, instant transactions, and real liquidity. Total value locked across DeFi protocols sits between $130 and $140 billion as of early 2026, spanning lending, borrowing, decentralized exchanges, and real-world asset tokenization. Traditional banks, the same ones that once called this stuff a joke, are now building on this infrastructure. Banks are enabling 24/7 trading of equities, money market funds, and bonds by tokenizing traditional assets, significantly reducing idle capital. And this doesn't stop at real estate. Art, intellectual property, music royalties, all of this can be tokenized. A musician can sell fractional ownership of their catalog directly to fans, who then earn royalties every time the song plays. The middlemen, the labels, the managers, the distributors taking their cuts, get bypassed. That's not a small idea. That's a restructuring of how creative industries have worked for 100 years. So what's next? Where does this go from here? Healthcare is one of the most compelling frontiers. Blockchain facilitates secure sharing of electronic health records, streamlines billing and claims processing, and enhances supply chain management for pharmaceuticals and medical devices. Your medical history owned by you, shareable with any doctor anywhere in the world, completely private and tamper-proof. That's the goal. Gaming is already moving fast. Web3 gaming has matured considerably, with true asset ownership allowing in-game items to exist as blockchain tokens that players own independently of the game publisher, tradable, transferable, and persistent across platform updates. And then there's decentralized science, DeSci, which is probably the least talked about and most quietly important development. The idea that research funding, data sharing, and peer review can happen on open, transparent blockchain systems, removing gatekeeping. What's finally making all of this feel inevitable rather than theoretical is regulation catching up. The US Genius Act in 2025, the EU's MiCA regulation, and frameworks in Hong Kong, Singapore, Japan, and the UAE. 6 major economies with real frameworks. That's the signal institutions have been waiting for. According to PwC, blockchain could add $1.76 trillion to global GDP by 2030, driven by efficiency and fraud reduction. So how do you actually participate? You don't have to be a developer. Start by understanding which industries you already know. Follow the companies building infrastructure, not just coins. Watch which governments are moving fastest on digital identity. The window isn't closed, but it's not as wide open as it was 5 years ago either. The people building the next generation of billion-dollar companies on top of blockchain aren't waiting for Bitcoin to do something interesting. They already moved on. The question is whether you're paying attention to what they're building, because this isn't speculation anymore. The numbers are real, the use cases are live. And Bitcoin? It was just the opening act.